What's up, guys? Long time no speak. I was on holiday in Egypt for 2.5 weeks, so I didn't get to. Well, actually, I wanted to do some videos whilst I was in Egypt, but once I got there, I realized that the internet was very weak and it only worked within a 20-meter radius of the reception. So I wasn't going to spend my time there all day. So I took advantage and just thought I would totally detox and deconnect from the markets um, and social media. So I really had very, very brief interactions with the markets. And obviously, I had my good till cancel trades in, so I knew now and then when a trade was filled, because every now and then I would just walk past reception. In Egypt, they have these massive hotels, especially in the Hurghada region. So you're typically outside on the beach or at the pool, but now and then it gets a bit too hot. You've been outside 3 hours, you just go past reception to get yourself a little drink or something, and all of a sudden I'd get all the numbers refreshed and some of the charts refreshed. So well, anyway, so I was sort of able to follow the general market direction, but nothing detailed like I usually do. You can forget day trading. It was just sort of surveying my positions. So even if I had strong internet, I probably wouldn't have been able to do the daily videos that I've been doing up till now. So anyway, no video in 2.5 weeks. That's the explanation. I was on holiday. I'm back. I missed this. And actually I was back 2 or 3 days ago, but it took a while for me to sort of get back into the swing of things. So let's recap the market. I'm not going to do the last 2 weeks. I'll cover obviously where we are as of Friday, and also a little bit what happened the last 2 weeks. But let's only focus on basically the latest. So looking at the SPY, Friday, very strong close. We closed at high of day. What's happened, right? Because this is the daily chart, and as of 2 weeks ago, I think we were just sort of consolidating at the bottom here, and then obviously there was some breaking news. I'm not going to go through everything. It is what it is. The market has digested everything. It's forward looking, so I don't think that the market hasn't taken into account something that happened a few days ago. It's all priced in, and some. So we've closed a high of day. It's bullish. It's still bullish. I'm still bearish long term. I'm sorry, but despite all the news, nothing fundamentally on the macro side has really changed. I know we've got a few central banks. Central Bank of Canada, I think, is the latest one to highlight that they are ready to slow the increase. Right, I think they did 50 basis points instead of 75. So that's one example. Will the Fed do that next? I've heard a few people think that they might, just for the November election. I don't know, but I don't think so. Actually, I think they'll still do 75. I think that's the way to seem politically neutral at such an important political period. So I think they'll stick with 75 basis points. I think that will send the market lower, as it usually does. Maybe not on the same day, but sort of the next one or two trading days later, the market rolls over again as reality strikes. And you know what? Even if they do 50 basis points, which I don't foresee, that's still going to raise the rates to a very dangerous level, to the point where things are going to break. Rates just where they are, even if they don't raise rates anymore, will still break the economy, the economy, the markets. So I don't really want to join that crowd that thinks, oh, there's a pivot coming, or if there is a pivot that happens, that now everything's bullish. I think the market's going up right now is a little bit because people expect a pivot to come soon. But I think even if a pivot happens, that pivot could be, oh, we're doing 50 basis points instead of 75. And then it's a sell the fact. This is the buy the rumor part. But anyway, news aside, and still you got geopolitics, you've got, the Russia, Ukraine, you've got the energy crisis, you've got a lot, the European economy is obviously the energy crisis, but also just political political issues in lots of different countries. And remember, there are always wars going on everywhere. There's like 50 wars going on at the moment. So there are lots of things and lots of black swans. I think charts sort of reflect all of that. So what's going to happen? I think, well, let's look at the SPY. SPY close high of day. I think it can go a little bit higher, maybe 400. Why not? We're at 390 pretty much. We had such a strong close. It wouldn't take much for just a small continuation. So ultimately, I think this downtrend that you can see, this large one where we have another 5% higher, then I think we go back lower. I don't care what happens. We might pop a little head above to sort of fake people out because I think everyone's watching this downtrend line. But ultimately, it's a general area of resistance. And whether it just happens below or just above, it'll move lower from there if it even gets there. The next point I think is 400 before we get there. So 400, 410, very simple. It's happening in 10 unit increments. Can we get to 400? Yes. However, and I'll get to this soon, I think the Dow Jones is a little bit further into that journey and it could reverse the whole trade sooner. Let me just do the NASDAQ. So you can see the NASDAQ is nowhere near as strong as the SPY, especially the Dow Jones. That's the Dow Jones, by the way. And that's because, and this is another reason why the market's going up, because all the big trillion-dollar companies, you know, Microsoft, what is it, Apple, Amazon, I'm missing a big one here, Facebook, Meta, whatever. All the big boys came out with their earnings. They were actually bad overall. I think Apple's the only one to have done well. But you know, and I think now that the market's happy that's out the way, now it can go up. There are lots of reasons. It doesn't really matter the reason, but the market's up. The Nasdaq is underperforming because it suffered so much because of those big tech stocks getting destroyed, like Meta 25% down. It's a beautiful thing. I actually bought some Meta around 100, which I never thought I would do. I hate that company, but you know, doesn't mean I can't buy the stock for a 10% bounce at least, probably more. So Nasdaq is nowhere near as strong as the SPY, but it's got the same sort of areas of resistance. It also closed high of day. It's still got a little resistance here before it can clear for the next run to about, let's call it 290-ish, and then 305. I do, however, think the Dow should be the focus. The Dow and the SPY, the Nasdaq, forget it because it's going to follow the others, and it's basically weaker. So actually, I would forget the Nasdaq for next week. I would really look at the Dow and the SPY. The Dow is very close to its descending sort of long-term resistance. I mean, how much is that? It's really surprising how strong the Dow's been. But look, 1% we're there. So it should act as very strong resistance. And we could sort of test it on Monday. So how is the SPY supposed to go all the way up here? How's the S&P going to go all the way up here if the Dow just has 1% before it meets resistance? Maybe we can test sort of 400. So therefore, maybe it's 400, or maybe we reverse straight away. Maybe we are at resistance, even though it's a strong close. I'm actually not sure. Doesn't really matter because I just, you know, I've got my positions. I can go through that later, but I think we'll go a little higher early next week. But I think all eyes on the Dow, what happens when it gets to about here. And that will sort of affect the other indices. Now, when it comes to the Russell, it's very similar. It's usually quite weak these days, 3%. I don't know. You know, I would just watch the Dow and I would act accordingly. So for me, it's all about this 33,200 zone. Who knows if it takes it out, the next resistance would be this one, 34,000. So maybe by the time it hits 34,000, then you get the SPY, which is around here. But I'm quite surprised how much the market has moved up. I see a lot of people getting bullish. It reminds me of what they were like when it's all the way up here and I was selling into that. I don't think people should be shorting or selling yet. I think you can get a bit more out of the markets before they come down. When you look at the VIX, we're kind of at a bit of a support zone. You could see this acted as resistance quite well. If we go low, I'd say it's low 20s down here, and then ultimately 20 or just below. So, but still, fundamentally, long term, I think the markets are a sell. I don't think anything's really changed. I think the pivot is overhyped, and I think the pivot could be, even if it does take place, it'd be very small, and the effect on the markets shouldn't be that much on the bullish side. It should something will break soon. Look at Credit Suisse the other day, down 20%. I mean, one of these big banks go bankrupt, the whole thing just falls. What about the treasury market? There's sort of rumors of it having liquidity issues. The treasury market, this is big stuff. So these rallies, I think you should be lucky if you're in positions that you don't like or you want to trim, use that opportunity. You might get a little bit more of a move up next week, but I would sell into this, and that's what I plan to do. And I haven't done much trading in the last 2 weeks, so I look forward to it. Now, let's look at the yields very quickly. Yields, you'd expect the yields to be really down given this move, but that is not the case. Let's do the 15-minute. No, let's do the 1 hour, sorry. This is the 1 year. I don't spend too much time on that normally, but look, it's come down a little bit, but it doesn't take much. And you can see this sort of descending resistance. It doesn't take much. It takes out, and the next day it's all the way up here testing the highs. It's 2 days, 3 days away from new highs. The 2 year, probably the most important one. Same sort of pattern. It wants to, okay, it's come down, whatever, that's usual because they were up so much, and as the markets went up, people left the bonds. So I mean, look at this, a small breakout here, the next day it's there, and the next day it's testing the highs above 4.5%. Dangerously strong still. 5 years, same thing. I usually focus on the 2s and the 10s. Look at the 10 year. Okay, it came down more, but in 1 day it's touching this descending line, and if everything else is going up, if yields go up, just 2 days and we're already testing the sort of 4.2 4.3 zone. So yields are nowhere near as down as you would expect given the market move up. So, and remember, yields is always the most important thing. I've had a few videos where markets are just crazy, and it's still the conclusion that it's because of yields, and it's because of yields. It's still the most important thing. Look what happened and this is one of the reasons the markets went up, I think, overall, because the British central bank comes out and, well, it wasn't the central bank, it was the new government, right? They got rid of the Liz Truss prime minister who basically wanted to lower taxes without paying for it, so that just made deficits worse and budgets or whatever. So the market overruled her and said, no, yields are going up because your financial plan doesn't make sense. And because of the drama involved, they got rid of her. They voted for what's his name, Sunak or something, the finance minister, who used to be in the race to become prime minister. But anyway, he's prime minister now, and he's more financially sound, and he has a more solid plan to be more fiscally conservative, let's say. So the market likes it. I saw just a headline today saying he even wanted to freeze foreign aid. That's how much he wants to balance the budget. They always promise they're going to balance the budget, but I think he might even go further than prior governments in different countries. So let's see. The market likes what they see. So, the yields came down. Let's look at the 30-year yield. Comes all the way down but this is also the rumor now that he's in. Let's see. I actually think we're going to break. I think worldwide yields next week will actually start to break out again and, break out of this downtrend line and start to move back up. I don't think we'll go all the way up, at least on the British ones. I think we'll move back up to here-ish, let's say. Let's go at least above 4% because this is overdone, oversold. But I think generally all yields will come back up. Let's see if this new government in the UK appeases the markets. I think they will for a while, but I still think yields will go back up. And I still feel like the 10-year will go back up. And as the yields go back up, the markets will come back down. That might not happen on Monday, but I think by the end of next week, yields will be higher than where they are now everywhere. Italian, not much difference. German, you can see. So I think we'll be back up in all the yields and the markets will be lower. So as the yields go back up, the markets, they might go a little higher here, but then they'll come down and then we'll be back here. But the charts will look bearish when they're back. So we might even be at the same price after having gone up. And then the chart look bearish and everyone starts to be bearish and then we come back down. So that's what I think about yields. They're going to go back up again, sending the markets lower. Let's look at the dollar. I was going to look at the DAX. The DAX is just the same, really, back at its descending line, a bit like the Dow actually, without moving up as much. I would be bearish. This could go up a little higher here, but then ultimately lower. Let's look at the dollar. So the dollar has come down. Let's just go on the daily actually. So the dollar did, made its high back here. Then it sort of double topped, you could say triple top almost, came back down to its ascending support. Now it's sort of no man's land going sideways. I think it could go lower. I think the dollar has done a bit too much. And I think it's healthy if it comes back down here. And even if you zoom out, it's not like it becomes bearish if we lose this ascending line. Just a retest of 104 is still totally fine, still in an uptrend. So let's not get over dramatic about this drop, and it's not much of a drop. I think you got to look at the other currencies. Look at euro dollar, for example. It broke out of this downtrend line, retests it, typical technical trading, and then it could curl, move back up. That's what could happen. You can go to 105-ish, let's say 104 at least. So you might have a bit of a move up in the euro. Yeah, 104 test previous support, 104 to 105. That could happen, and that obviously would equate to the dollar going down. US dollar, Japanese yen, that was very dramatic because 150 was that was a very important line in the sand for the Japanese central bank. The Japanese government is losing control of everything. And if we take out 150 now, that would mean the dollar going up. So, but just bear with me. If the dollar does take out 150 and run, what does the Japanese central bank do? Because to protect the yen, they can't print. So they have to sell dollars in their FX reserves. And it becomes this contradictory policy where they're printing nonstop to buy bonds to keep yields low, but then they have to do the opposite to keep the yen strong. So I think the Japanese could be the massive black swan. That's the thing. There's just black swans everywhere. So why would you buy the markets after a big move up already? But I'm not sure what's going to happen with the US dollar, Japanese yen. I think there's a lot of things happening under the surface. Ultimately, I think it'll go up, actually. I think the Japanese are going to lose control. So I don't know if it happens immediately. If there is a bit of a move up in the euro, I don't think it will last long because I think the dollar will go back up, actually. The pound also downtrend line, a bit like the euro. Let's just forget what I said about the Japanese yen. It's a bit of a special case. But if you look at the euro and the pound against the dollar, both, they're sort of hitting their downtrend line, but I still think they could move a bit higher. And that would send the dollar index lower. How much lower? At least to 109. If not, we could go to 105 and then move back up. Not in one straight go. We'll see what the chart looks like by then. But that's why I've got this circle here. I just feel like 105-ish if we lose this ascending support. So a little lower. And what would that do to the markets? Well, the markets would go up if the dollar goes down. But commodities especially would go up, and commodity related stocks. So let's move on to gold and silver. Very bearish, actually. You would expect gold and silver to be higher if the markets have moved up so much, and if the dollar has been this weak, hasn't been too weak, but it's been lower. So with those two catalysts, dollar down, markets up, you expect gold to be propelled higher than where it is. And actually it's almost at its lows. Silver's been outperforming gold for a while, but still relatively weak. And, if gold goes down, then silver will go down, no doubt about it. Although there are some traders who think that gold will go much lower and silver will go much higher. I don't see how that happens. 1.5%, that can be done very early next week. So if the markets keep going up, then you wouldn't expect gold to. Maybe that's why gold's going down, because everyone's sort of buying the markets in this euphoria. Um, I just feel like gold and silver could flush, actually. I hope it happens. I hope it happens. I still have a lot of sidelines ammo for that. Um, but yeah, I mean, there's not much to explain. It's very bearish. It takes 1 or 2 days to come back down to its lows, 1620. It loses 1620, goes straight to 1600, and then might go sideways 1 or 2 days, and then probably try and flush 1600 psychological number and take it to sort of 1570s. And that's a buy zone. That's where I'm ready to buy 1570-ish. That would take some move though. That might take some news too, but I'm pretty bearish of gold at the moment because of the charts. Silver, therefore, the same feeling, although that would take several trading sessions to get down to its lows of under 1800. And there's a lot of support at 1800, a lot of support. I mean, and there's also a lot of talk of real physical shortages. They always say that, but it looks pretty serious this time. Like almost world record shortages in the LME and all this. So I would love a flush to buy that. Yeah, silver's quite strong compared to gold, but still pretty bearish because it should be doing much better. It should be all the way up here at 21 silver, to be honest, and gold should be around 1720, given where the markets are. However, the miners underperforming the market, but still not as weak as the underlying metal. You can see this downtrend line. For me, this is GDXJ. It's got to take out, and can it do it if the market goes up a little more? Maybe, but I would sell into it. I would sell into it because I still think, like I said, the markets will drop soon. They will sort of top out, and I think the miners will top out too. And if we do take out this sort of 31 zone in the GDXJ with the markets going up early next week and a dollar going down, let's say, or just going sideways, then we can get to 32-ish, and I'd be selling here. I mean, it's been a sell zone for quite a while, and then this time I would say the miners are even weaker than the last time, so I would sell into it. And if it goes higher, sell into that. And I would be very, very heavily out. I keep a core position just in case I'm wrong. And, this is something for years. This is my strategy. But I would be probably half out of all my miners if we're here, hoping, just praying that it goes lower. Here, I'd probably take a 25%. That's how things are as of now. Depends what the markets are doing. I mean, if the markets start to go down and the GDXs keep rising, then I would change. I'd hold fire and sell a lot less, maybe 10% instead of 25 on each of these. But as things stand, I would be selling here and here if it even gets there, especially the second level. GDX, same thing, exactly the same thing. Same chart makes it easier. So a little bit more bullish on the GDXs. But given what's happening, I would be a seller into these levels, which is what I love to do. And that's it. I hope that wasn't too long. I'm a bit rusty on these. And actually, that was one of the... I haven't really looked at the charts too much, so I had to improvise there a little bit. So hopefully you enjoyed that. I look forward to making a lot more videos. I'm going to make another one immediately, actually, on the large cap stocks, because I bought 1 or 2 and a lot of things happened that was probably worth a review. So anyway, hope you enjoyed that, and subscribe, comment, and all that stuff. Thanks.